So actually what I wanted to do this morning was look at some of my trades I took this week just to kind of remind myself what I'm looking for, just to kind of help recenter myself. I'm pretty exhausted this morning. This week's been kind of crazy. Um, and I find looking at past trades you've taken that are pretty much bread and butter of what you want are great ways to just mentally help focus your plan for the day. So like what I'm looking for is this is a trade from, I want to say Tuesday, is, the market opened, sold off, and then started to slow and bounce, and then, made a pullback here. If I bring my checklist, basically following this checklist is what I'm looking for. It's at a reversal zone. This spike down was unhealthy. And then the trend broke by this trend starting to go like this. And then we have a spike here. And then the reversal pattern is essentially it was making a double bottom here and kind of a head and shoulders. And this spike down was a lot in price movement. And so from there, I thought that that was good enough. And candlestick confirmation was essentially I'm going to get in above the break of this. So from there, I entered an order and looked for kind of the reversal off that zone, and caught a nice swing, looking at kind of trailing at my stop, looking to see what the market's doing, if it's going to continue higher. Eventually, it kind of slowed down, closed out for a nice trade there. I think the other one from yesterday, I don't have a recording of it, which is kind of annoying. Just because I didn't switch my stuff over properly in the moment. So I actually have to pull up yesterday's live stream to do it. So yesterday, kind of same thing, is the market was, hold on here, messing around with all these windows. The market was kind of just opened up here, spiked up into a reversal zone. And then I was looking to see, okay, is this, I mean, drew it, was like, is it going to get too excited here and then essentially reverse? And that's what I was kind of looking for, was eventually it pretty much reversed off of there. And I, I had a little spike. I was patient. I didn't FOMO in. This spike right here is very easy to FOMO in on because it feels like, oh, the sell-off is happening. I'm going to miss out on the trade. And I don't want to miss out on that because this is something I'm waiting for. And having the market sell off without you when you were predicting it to do that sucks. But I'm following my rules. I need to wait for a pullback to happen, and then I'll get in on a break of this low. And so from there, patiently waited it out, and then put in an order as it started to sell off below the low, because that's where the confirmation for me was. So, jumped in the trade, had my stop up above this swing, because this was pretty much making a, if I try and show this, it pretty much made a head and shoulders here. And so I put my stop above the right shoulder. And then from there, just it sold off really nice. I trailed up my stop down to here once it kind of got spiked a lot, with the idea that, okay, this is a good signal that it could continue lower, but also on the flip side, it's an unhealthy move to the downside. And so when that happens, it's the exact same thing like this, is it could be the end of a trend and it starts to reverse. And so I don't want to get married to the trade hoping that it goes down here and I make a boatload of money. I'd rather, stick to my read of the market, stick to my signal, trail my stop loss up, and get out if it looks like it's going to bounce, because we're also at a major pre-market support. And so the market pretty much bounced there, and I, closed out with that trade right there. And so that's going into today. That's pretty much what I want to look for. This red line is where the market opens. I want to see if it doesn't move exactly like yesterday, makes kind of a topping pattern, and catch the move to the downside. Or on the flip side, if it sells off, I want to see the same thing happen, and I'll look for kind of a swing because the market is so back and forth. This is a clean, unhealthy move where you can see the market cleanly reverse pretty much this whole move, and that's what I want to look for. Now, this isn't something I was able to take because it was pre-market, but you can see it pretty much just gave back that whole move, and that's what I like to use as a target. This market looks exactly like yesterday morning. If you guys remember, we had a healthy trend, and then all of a sudden it accelerated, and then it topped out, and it gave back the whole move before starting to chop into the open. The open chopped a little, and then it got going, and then we were able to take a trade. So that's what I want to be looking into today. I'll go through my levels real quick again for anyone that just joined. If you want to ask questions, by all means, you do need to subscribe to ask them, just like the normal free YouTube subscription. And as well, feel free to like the stream so we can push to more people if you find things helpful. So first off, big picture hasn't changed. We're really back and forth. I think we can take a trade any direction today because of this range we're in on the S&P 500. The NASDAQ is similar with a slight biasness to the upside. And then, so pretty much I'm looking to see, okay, is oil going to come, the NASDAQ here, I'd want to see it come down and test the previous highs here. I'd want to see it come here and bounce. I think that would be a great trade. The S&P 500 here, that would be pretty much down to this level, this kind of middle of the range level. Not as good of a level, but still pretty good. And then on the flip side is, okay, do we come up here and retest the all-time highs and sell off on both of these? Do we get a little bit of a breakout to the upside, get people excited, and then, just rip lower? Because at this point, actually, if we look at kind of like the big picture, this on a daily chart here, we had a crazy move the last couple weeks, right? And then everyone all of a sudden was thinking, well, this crazy move has to sell off. We have to have some kind of reversal here. That's probably what was happening here. Is there was a lot of people trying to short, and it's not working out. It's slowly making new highs, chopping around. Especially in the NASDAQ, it's making actual new highs. It's like up here. It's destroying people that are trying to bet against this move. And so after a while, those shorts are going to start saying, okay, well, this is so strong, it must continue to the upside. And the market likes to just trap people as much as it can. And so I think if it's going to do that, it's actually likely to, we could get a fake higher and then the move happens. Once everyone decides, okay, shorts aren't happening, we're actually just going to climb higher. I think that's totally a possibility. Another possibility is the market's just so dang strong that we just slowly climb higher, or we just sit here for a week in this choppy range, working off this crazy upwards move we have. And then looking at a 5-minute, not too much different on a 5-minute. On a 1-minute, there's kind of this downwards trend on the ES. It looks like we've broken that. NASDAQ, same thing. So I'm just going to actually remove those. And then, we'll kind of just go from there. We'll kind of let the market open. So let me know what you guys' questions are, and I'll try and see if I answer them. And last thing too, we do have news, inflation news at 10 o'clock, which I think is important, because oil obviously affects inflation a lot. And of course, oil is very inverse to the market right now. So I'm definitely watching what oil is doing to see how that affects the actual market. It can be the big banks and stuff that do trap people, but a lot of times it's also just the supply and demand. You know, everyone's one direction and then that dries up and it just flips very quickly. The platform I'm on is called NinjaTrader. You can get it in the link in the description. It's mainly futures trading focused. For anyone new here, I'm trading the futures markets. I find them super easy to trade and also get really good leverage for a small account. It's really, really helpful. I do live trade every day of the week that I trade. So most of the time, 4 to 5 days a week at the moment. It's definitely something new, but you know, at the moment, I'm just trying to do it as often as possible. I don't think it's not. I think so. So I only look for the reversals off these levels. The next iteration would definitely be like, oh, well, I could look for the continuation trade. Like if the reversal fails, a lot of the time it will continue. I don't know if it's. I think you're totally fine trading that as well. I don't necessarily like it. I think it adds some complications just because then instead of looking for the reversal, you start looking for the long, and sometimes you'll take a long when the reversal actually was the good trade, or when you think the reversal fails and you just stay out of the market, you go long, and really the market just kind of sits there. So it kind of adds some difficulty to things. I think it just adds another variable. It can work, you know, but take it slow. I don't trade on the weekends. Well, the futures market is closed pretty much most of the weekend. And you know, I don't like trading after hours. I really only trade the first like 60 minutes in the morning, because that's when my setup happens, and it's easy for me to get in, get out, and be done with it. Otherwise, I trade too long and I make mistakes because I get decision fatigue. I've never seen a slippage problem with micro futures or mini futures. Granted, you can get it depending on the market and the move that happens, but it's not something that happens very often. Even when I traded like 20 micro futures contracts before I switched over to, or mini futures contracts before I switched over to the main contract. I don't use prop firms. Um, I don't really like them. I think it's better to go the normal trading route. I think prop firms kind of dangle the idea of making a lot of money in front of you, kind of like a piece of cheese in front of a mouse that you can never get. And if you do get it, you lose it very quickly because you're so excited that you finally got it. In the sense of like you go from demo trading basically to now trading a crazy amount of money, and mentally you can't handle that because it's all of a sudden you're like, oh, if I can take $5,000 on this one trade, and you weren't making any money before. The top and bottom of my reversal zones is generally I'll go to the NASDAQ. Actually has a cleaner version of this. I like to get, so the top for a resistance spot is, well, technically I guess this is a support, but it's kind of a resistance that's turned into a support. I'll capture the actual high. Like I want to see, okay, when the market comes down here on a 1 minute, I want to know that this is the actual high. And then from there, the bottom, it's pretty subjective. I pretty much just look to capture, okay, there's kind of this swing, there's kind of this, capture this a little, capture this a little. There's nothing wrong with pulling it down a little bit too. But, so it's the hard part is it is a little subjective. But what I try and do is keep them on the smaller side. You don't want to have a zone that's like this. Because at that point, for me, my zones, I want them to be kind of extremes. And so I want to be waiting for the market to come down and test the extremes. And if it comes down there, then I want to look for a trade because it's more likely to be overextended. So we've got a couple more minutes on the market. We'll see kind of how this opens. And if I miss your question, I apologize. There's definitely a lot of them. And if you have questions on more of what I do have YouTube tutorials that talk about my strategy, talk about futures, explain what I do, so that you can, learn kind of what I'm doing. I kind of think this NASDAQ trend line hasn't actually broken yet. Just the fact that we broke it a tiny bit, I'm not too concerned about. It pretty much did a failed breakout and then reversed. The ES is a little bit more broken. Oil right now is related to the NASDAQ and S&P 500 futures just because of all the news in the Middle East. A lot of times it isn't, but because if you look at a daily chart on oil was just happily trading down here at between $60 and $50 a barrel. And when the news in the Middle East shot up to, it up into the 90s, that causes a lot of damage to the macroeconomics of the world because oil runs everything, like every transportation, every machinery basically runs on oil. And so that, in a way, that runs the economy. So I like to trade pretty much the S&P 500 futures and the NASDAQ. The NASDAQ, actually, I took the trade in the NASDAQ yesterday over the S&P 500 because the NASDAQ's actually been more volatile. And I'll actually probably do that today again, depending on how things set up. Just because it's been more tradable in the sense of the moves have been happening better, and the volatility has been better. A lot of time I try not to do that, but when the market shows that and tells me that, I will switch over. I like trading the NASDAQ or the S&P 500 more because I think it's technically a little more reliable, and methodical. But I do want them to both be correlated and moving in the right direction. I want both of them to be selling off. And so both of them right now are selling off. And so when I look for a reversal, I want both of them to be setting up the same reversal. And it's kind of just a pick and choose which one I want to get in based on how they're acting. But generally, I'll try and default to one. I don't really trade gold. I kind of stick to just these two because over time, mastering one market has made me able to read them a lot better. Like I can just recognize things that are coming that I couldn't years ago. Yesterday I took a short and then stayed away from taking a long, and it didn't really work out great. Hindsight, it did work out really well if I was able to stay in the trade, but a lot of times like that, the second reversal of the day doesn't work great. I have no idea if you can adjust the candlesticks of the NinjaTrader app on your mobile. Reversals do happen around the same time. That's why I have these vertical lines at these times, is those are 2 times I have noticed where the market often likes to reverse. I like to give the market kind of about 10 minutes here, and then I'll look to see a reversal happen if it's at a level, obviously. And so I'll kind of look to see, okay, is it going to bounce on this time zone or bounce on this time? And we're, the Nasdaq's in a pretty clean downtrend here. For other markets, like for what to trade in the UK and stuff, I can't really help with that. I'm sorry. If you can't use NinjaTrader and get access to the futures markets that the US does, that's kind of my bread and butter, and it's hard for me to know what works in other countries just because they're all very different. So I don't look for percentage to capture on my trades. I like to use a risk reward tool, and I like to try and target at least roughly 2x profit. So, depending on a swing, if we move up, like there's a potential for it to go more, but I want to at least see roughly 2x. And so the reason why my candlesticks aren't your normal red and green is because trading is extremely emotional, and how things trigger you in terms of having money on the screen. I would say take away money on your screen if you feel like it's triggering you. To me, I'm so desensitized to it now. I can control it. It still definitely affects me some, but only at extremes where it's like my trade is up a crazy amount. Where if it hits an amount that I've never seen before, that definitely gets a little intense. But I know how to deal with that emotion and kind of breathe through it, and not let it affect my trading. But the same thing with candles. Like when you're in a long trade betting that it's going to go up and you see the market printing a bunch of red candles, red is just a very triggering color. Same thing with green. If you're looking for a long and you see all these green candles, it's going to trigger your excitement more and more. And so I just chose white and blue because they're very calming colors that aren't going to mess with you mentally as much. It looks like interesting enough, the NASDAQ is starting to kind of bounce here while the ES is still kind of just selling off. I don't take a certain number of contracts because it depends on the market, and if I'm trading the Nasdaq or the S&P 500, it actually depends on, and also depends on my stop. And so I have this tool that helps me just target. I try and target $1,500 of risk every time. So it's been about 6 minutes. Still giving this thing a little more time to play. Gonna do a little analysis here, see if I see anything setting up. We could be just coming down and retesting this level here and potentially bouncing. I'm not going to take a long here. I want to see it move further. To me, that's kind of middle of the range. There's not enough confirmation there. But keep in mind that we could just be, NASDAQ only just filled this gap of this move up. And so things could be trying to bounce off of that. I don't know. Maybe I'll go back on what I said. If this does set up like a nice reversal pattern, frankly, I might take it because I think the bias is a decent potential for a reversal. I want to be flexible on what the market's doing. The past couple of weeks, we have had spots where it actually bounces off of these levels. And then just the uptrend continues because the uptrend is so long. For drawing my zones, I have a video on it that I talk about, the steps I use to draw them every morning. It'll go into way more depth. Other than that, you can also go back and watch the live streams of me drawing them, or just show up when I start the live stream, and I'll be drawing them then. Yeah, because I could definitely see this bouncing here. I don't like it yet. Like I can see a bottoming pattern here. But even to me saying that, over time I know that I can see is almost like a trigger word for me of it's my brain trying to justify getting in. It's essentially me trying to make something out of something that doesn't fit my strategy, and trying to essentially FOMO in to a spot. Um, because it's like, oh well, I can see that it bounces here, and so I should jump in a trade because, well, if it does, I'll make money. But that's not what I'm trying to do. I'm not trying to react to what the market's doing. I'm trying to wait for the market to fit my plan. And if I miss a swing, that's okay. The I think a thing to try and say to yourself, and that works for me too, is not that I missed a trade because it didn't fit my plan, and so I didn't miss anything. There's always moves in the market where you could have made money. I could have shorted right here at the open and traded 100 contracts and made $10,000 or something. But that's not what I'm doing, right? Just to kind of look at oil here too. Oil's not really doing much at the moment. I'm just kind of watching it to see how it's correlated to, inversely correlated to the market. I'm not going to trade it, but just because they're so tied together right now, it's important to pay attention to. I mean, oil looks like it could kind of go either direction. It could be setting up a 5-minute bottom here, and reverse this move, which would continue the downwards pressure on the main market. But this looks like more than a 50% pullback here. So it could also continue to the downside, which would put upwards pressure and make the market go up. Just adjusting my lines here. I'm not going to jump in. I think I would take a long on the ES here, just because it's a little more bearish in the sense of Nasdaq's already pushed up here. But to me, that's kind of chasing. And if they're both going to go up, they're both going to go up. But I'd want to see kind of a pullback here and it set up pretty cleanly. I don't know if it's setting up something that I want to take yet, though. It's kind of just in the middle of this range. And we're at the top of this downwards trend. Nasdaq might sell off here, and that'll push the S&P down to the lows. And waiting another 15 minutes for the market to move down to here, 10 o'clock to come out with the inflation data, then the market might get some movement and we can take a trade based on that. I don't trade after hours. I literally just trade the first 60 minutes of the market open, looking for these kind of moves. And I don't really look at the other indexes. Um, the Nasdaq and the S&P are I find enough for me to kind of get a read on what the markets are. Nasdaq's definitely making a good push down now after that. I think the question is there kind of a head and shoulders right here that it's going to set up? Just trying to see how this reacts to this downwards move here. For 15 minutes after the market open, where a bounce can happen. But the way this is acting, I'm not sold. I think it's better to wait another 15 minutes until news and see if we. I think it's likely we continue down here versus bounce here. I think this is getting a little too aggressive on the market. You know, if it goes up, great. I'm okay not jumping in on it because um, we're kind of just being choppy. It's not a clean move to reverse. I like to look for a cleaner move. You know, yesterday and Tuesday we had much more of a cleaner move. You know, this is kind of the move I want to look for. I want to see it spike in one direction, and then it sets up. This is like a mini head and shoulders, and then you just capture that move down. There was a decent little move down here on the S&P 500 here. Like I definitely see the potential there, but the way the Nasdaq's acting as well, that doesn't give me confidence that they're both going to move in a constructive way for an actual trade. You know, there's kind of two things you have to do. You have to read the direction right, but you also have to have the move be tradable. You know, and you have to be able to make money from the move you're predicting. And so that's why sometimes I'll stay out of something like this. Because even if it does go up, the way it's acting, it could just be really choppy and hard to hold through. And I'd probably just get knocked out at break even. So what's the point in risking, you know, for me, risking like $1,600 when I'm probably just going to get out at break even or maybe get 1-to-1. Like the risk reward you want to think about is the risk reward there for a trade. And today's Friday. Friday the last few weeks, sorry, have been kind of slow into the weekend. And that's because pretty much every weekend there's some Middle East news. And so nobody wants to hold or hold a trade into the weekend because the risk of, why would you risk holding a trade, like betting that the market's going to go long or betting that the market's going to go short into the weekend when it closes, something could happen in the Middle East and then all of a sudden it's gapped up or down a percentage or two. To show you this, my chart is struggling here. This is exactly what happened last weekend. I believe, yeah, the 19th was Sunday. And so the market, closed here on Friday. It kind of had a big bull move into the weekend, closed, and then had a big gap lower. And so why would you risk getting in long or short when the potential for a big jump that you can't get out of while it goes against you, and then all of a sudden you open up and you're down like 4 or 5 times your stop loss, and so nobody wants to hold into that because there's so much potential for that news to just do something crazy, and so that's why Fridays have been kind of slow recently because it's not worth the risk. It's better to wait and be trading Monday to Thursday when there's not the potential to get kind of screwed by the weekend. I do have a NinjaTrader demo, a NinjaTrader account setup video on my YouTube homepage. If you are new to futures, new to trading, the strategy, or new to NinjaTrader, I have really polished tutorials on my YouTube channel. Yeah, another couple things on Fridays is options expire a lot on Fridays. I guess it's not the third week of the month, but maybe it is because it was kind of a funky month. But a lot of times options expire on Fridays too, and so that just causes some chop. I do pretty much live stream 4 to 5 days a week in the morning. To just execute my strategy, and I'm new to it, but um, planning to just continue doing it. We're still just pretty choppy. I think we're just chopping into the 10 o'clock news right now. Um, for everyone new coming in or that hasn't seen it, at 10 o'clock market time, we have the consumer sentiment and inflation expectations. And I think the market's waiting for that because with oil going crazy, the inflation expectations should be pretty important. Just because oil, generally, inflation follows oil. Big thing too is this week's been pretty active trading wise, and so it's hard sometimes to adjust to a slow day like this. That's the hard part about trading, I think, is adjusting back and forth and recognizing what kind of day it is. Um, yesterday I took a trade. Day before that was choppy, and then day before that took a trade, and Monday also took a trade. And so you got to be able to know when to strike, but also know that okay, there's some signals here that things are just kind of chopping. And 10 minutes ago I was thinking, okay, maybe we can look for a long here, but not forcing that when the signals just aren't there. I don't use fibs too much. Pretty much the only one I do is I use the 50% retracement. Just like to see, okay, a swing happens. A lot of times it'll come to the 50% level and then it'll continue. I like to see higher volatility because that allows you to get higher risk reward ratio. That you can risk $100 and look to make 300 or 400 hopefully. I'm green on the week. I took 2 wins and one. The Monday trade was a break even. It was even half size because it was Monday. And the trade I thought warranted taking a trade, but it didn't warrant full size. So the relationship between the S&P 500 and the Nasdaq is, don't try and read into them in this. I tried to do this actually myself when I started to watch both of them, is I would try and read into the micro differences. It would be like, oh, the ES here is right at this price, chopping a little bit, while the Nasdaq actually is at a lower price in relation to where the ES is, or the ES is, just made a new high where the Nasdaq kind of hasn't. And doing that messed my trading up. What I do now is I just look at kind of the big picture of what they're doing. Are they both moving in the same direction? Um, is one chopping versus the other one is trending? And so if they're not moving in the same way in a rough big picture, I don't like to take a trade as much, because it's less likely that it makes them less predictable. And so having them move in the same direction is kind of mainly what I look for. And then I'll kind of flip flop back on which one I actually take a trade in based on how they're setting up. I like to default to the S&P 500 for trades because I think it's more methodical and a little more predictable. And I think the signal there is a little stronger than the NASDAQ. But recently, the NASDAQ has been, the swings and getting in trades on the NASDAQ has been better. So I actually took a trade in the NASDAQ yesterday. We're getting a nice move here, actually. 4 minutes into the news. So this is what I would say is an unhealthy move. We're just chopping here, and then all of a sudden we start getting this acceleration. And ideally, both of these markets come down into this support level. That's the correlation I would like to see, that they both come down to the support level. And then we can start kind of checking things off on the checklist and look to see if it's going to reverse to the upside and take a trade. The ES definitely has a little ways to go. And if the NASDAQ goes that far, it's probably going to blow through this level. But looking at it, it could kind of just go. I mean, the acceleration also really started down here. So I could definitely see expanding this down a little bit. Gonna clean this up a little bit since we've broken this one level here. Quickly draw a little one here just to see if we come in and bounce off of that. Again, I think 3 minutes until news. This is a nice spike to definitely start something. And I think I still like the NASDAQ for a trade versus the ES. Just going to be patient here and just watch this for the next 3 minutes, because I don't want to enter in before the news. I think the news is big enough that it could cause some unwanted volatility for when you're in a trade, and so I'm going to wait until that happens. Definitely a nice little fake lower. The ES here is essentially, I like this as a failed breakout, essentially, where it's attempted to go lower and it's failing back into this range that's in. I'm not going to chase this, though. If it just spikes and rips, so be it. I want to wait for the news because that is not worth trading into. And ideally, I think if anything, we could get something like this. You know, we break back above this, and the NASDAQ retests this low basically for a pretty clean head shoulders here. And then we could look for a trade to the upside. But until then, this could just come up, retest this level, and sell off. The downtrend, I wouldn't say is necessarily broken yet. But this push lower in reversal is definitely a signal to me that there is potential to start moving now. That's what I want to look for versus trying to predict and read into this chop too much. Just to look at oil to see if it's doing anything. On a 1 minute chart here, oil on a 1 minute chart is literally just going sideways. So it's hard to kind of see anything there. It's kind of got this little uptrend, but not really much read to go off of on oil. Still just kind of mainly looking at that on a 5 minute. So 30 seconds till news. This is a nice, I'm just going to remove my little red line here. Now we know that it's coming in 20 seconds. We've got a nice, this is a nice punch lower. I want to see it though, still like I said, I want to see a pullback. And I'll actually, my checklist, you know, we're at a reversal zone. It's had an unhealthy move. I would say I'm waiting for the trend break to happen. There's the news. You can see it's spiking. And then the reversal pattern we're kind of looking for is it to kind of fill out this head and shoulders. But we could totally just, a big picture, this could just be trending lower. And so I want to avoid buying into that downtrend, you know, when it's not telling me enough signals that it's over. Doing a quick stretch while this plays out. I'm still watching the NASDAQ on a chart too. On another screen. This to me looks like it's like this is definitely a nice pullback here. It's almost a little too volatile though. Like this feels trappy to me. I don't like that kind of movement. That's very FOMO-y inducing. And I don't want to jump in on FOMO. You know, to me, this is a nice little fake lower, kind of like what I was talking about. But because it's happening so fast like this, and we're already choppy, to me that feels like it could, it's not going to be clean. You know, even here, like this feels like this to me reads like it's going to go up, fake, and go down. And so I'm not going to jump in on that. That kind of crazy spike is not methodical. And it's just kind of reaffirming that things are just choppy and just not super tradable right now. Even if this kind of recovers at this point, the ES, this is not that much of a move down on the ES. Like it's just kind of going like this. I don't need to get in on that. And the NASDAQ here, kind of similar. That's definitely not the move I wanted to see. I wanted to see it be a little more clean and methodical versus having a crazy whip like this. We could get, if we get one more push lower and kind of a bottom that sets up a little cleaner, that would be what I would consider for a long. you know, especially with the S&P kind of making a bigger move down. Yeah, especially with the red and white bars or red and green bars. With these spikes, those having the red bars or green bars causes so much more FOMO, I think, versus having these more calming colored bars. It makes it easier to deal with that FOMO that that candlestick caused. You know, because it was pretty much right at. I was literally thinking, am I going to get in right here at a break above this? I was not far from looking at taking a long there and entering, and then all of a sudden this massive spike happened, and the thought is, you know, your brain goes, okay, well, if it does this once, what if it does it again and again? Like I would, and I if I chase right here, I'll get a huge trade. And the market's telling you it's not going to do that because it's, you know, generally it's going to repeat what it did, and what it's been doing today is garbage. You want to take trades and be aggressive on the days that are good. For those of you that are on the phone stream, you should be able to go to my main channel and open up the horizontal version if you want to watch that more. YouTube just has a setting where it makes both possible. Like this is still, there's still kind of a bottoming pattern here, but again, it's just choppy. There's no reason to say it couldn't just it was chopping here and now it's moved down a little bit and it just chops here. You know, this is how some days have been where it just kind of sits here and chops. And then without a good signal, the market just starts to trend. And that's frustrating because it's, to me, that's not tradable. But, you know, that's kind of just how the market is sometimes. I don't actually use any indicators. Um, I find it way easier to just read the price movement. Yeah, if you look since the market opened, we've literally just been in this range. I don't know how many points is that? 20-point range roughly, a little bit less. So the market still got it's still got great volatility. It's just it's very right now it's very back and forth between some days it just sits here and other days it has great movement with great tradability. Like today is horrible. If we look at yesterday, yesterday was okay. Yesterday wasn't great either. You know, this is the trade I took yesterday was literally this move right here. And then it kind of just chopped up. I think the day before that though, no, the day before that sucked. Didn't do anything that day. And then this day, this is another trade I took. We took the long here. I got out here. I thought the market was actually going to trend higher, and all of a sudden, just crazy movement to the downside. And so, you know, there's days where it's good and days where it's bad, and you want to be engaged on all days, but you want to take trades on the days where the market's showing you that it's good, because then you can make money, and then you have to stop yourself from trading on days like this so you don't give that money back up. So to start with futures, I would highly recommend if you're new to futures, go watch a tutorial on my main YouTube channel. If you just go to home and scroll down, there's a playlist that has futures explained, because it doesn't cost $7,000. This isn't, it's not based on the dollar amount, the side, the price of the index. It's totally valued differently, which is, it's definitely a little confusing in the beginning, but I like to think of futures as they're as simple as trading stocks, but you get the leverage of options. I stopped trading options because I thought just the complexities were just not there. Or sorry, the complexity was just too much. Like there's so many variables, and I just wanted to be able to buy, and if it goes up in my favor, make money. It was frustrating to have times where it goes up in your favor and you don't make money. Maybe that's my problem, but to me, futures made it way easier to do that, and you can start with a really small account, like literally $50 to $100, because you can start risking like $20 per trade. And the platform I'm using here is called NinjaTrader. I've used it for pretty much 5-6 years at this point. Really, really helpful. Oil actually here is breaking lower a little bit. Out of this, I wouldn't say it's out of this chop range it's in yet. It's kind of definitely in this little crappy range. So that's definitely causing the reverse spike here. But to me, that doesn't really say anything either. Yeah, futures, I would just go, I highly recommend just going and watching that after this, the futures explained video, just because it's going to be very educational. It's hard to explain easily and quickly. If you just go to my channel here and scroll down, just watch this video right here. That'll kind of walk you through everything. So yeah, if you guys have any questions about a lot of the basics, go watch those videos. I think at this point I'm gonna call it. I think we're just chopping. The trade I was looking for, the time has passed. Maybe it rips up from here, but to me this was not tradable. It was not worth the risk. It's obviously very choppy of a day. It's Friday. I'm not gonna stay longer and force something. Yeah, so if you're new, go check out those videos. I will be streaming next week, starting Monday, same time as always. So I wish you guys a happy weekend. Make sure to do something that allows you to reset for Monday so you can come in ready to trade, because in this market, no telling what happens over the weekend. We could have crazy volatility come Monday, and it'd be really tradable still. We're definitely in good market conditions right now, but it's definitely very tricky to, some days are good, some days are just like this. They just suck. So I appreciate everyone being here. If I missed your question, I apologize. It's hard to get them all and trade. But again, a lot of those basic questions can be asked if you go to my YouTube channel and watch those tutorials. Have a good rest of your day and have a good weekend.